Imagine this, a future where African businesses and countries can trade seamlessly without the constraints of the US dollar. Such a move could benefit Africa and save billions in transactional costs. In this video, we're going to look at how the new Pan-African settlement and payment system will benefit countries in Africa as well as businesses. We're also going to delve deeper and look at how such a move can benefit you as an individual, as a household unit, and all the other benefits that can come from such a move. This is Friday Money Matters. This Friday and every other Friday on this channel, I'm your host, Kenneth. Thank you for tuning in. The introduction of a unified payment system under the African Continental Free Trade Area promises to bring a lot of benefits, up to approximately $5 billion saved from transactional cost. Now we know that we've always had a system where inter-Africa trade is still routed through European and American banks, and this results in a lot of delays and a lot of cost incurred. If you have used any bank at all in whatever capacity, whether it's a savings or whatever account you're using, you know that the bigger the transaction, the bigger the transactional cost that you're going to incur as a customer to that particular bank. So therefore, imagine then Africa spending approximately trillions in trade year on year. It means that the transactional cost for that particular trade goes into billions of dollars annually. Now let's look at economic benefits. First benefit was going to be a savings on transactional cost. Now, if we move to a system where countries are going to use their local currencies to trade between themselves or amongst themselves in Africa, in your particular regions, it could be SADC, it could be in East Africa, West Africa, Central Africa. Using local currencies means that the cost of changing the currency to US dollars and then routing it via the European or US based banks now is cut off. Now, if we're cutting off that, all of that amounts to savings. As I mentioned earlier, these savings will amount to approximately $5 billion for Africa annually. Again, secondly, it means that there is also a time aspect there. You're saving time. Now, the delays that would have been faced routing these transactions through the European and US-based banks is now rid of. Now, if we don't have that delay, therefore it means that trade within Africa then becomes faster and smoother. This means that there's a benefit from the supply side of things. Customers get their products on time, and also suppliers will not have difficulties with their buyers in getting the products where they need to be, and this will benefit Africa. The second benefit will be formalizing trade. Now, approximately 50 billion can now be earned if trade is formalized, especially looking at bringing in the informal sector into the formal trade. Now, what this basically means is that we know that a lot of entrepreneurs are based in the informal sector, and as such, these are not part of the mainstream of trade, and a lot of money is made in that particular informal sector. There was a report back in the day where just the Johannesburg informal sector valued to approximately 10 billion of rands annually. Now imagine then having all these informal sectors from different countries coming together and being formalized. There is also support for SMEs with a benefit of approximately $1 billion that has been adjusted and has been set apart for SMEs. Now, SMEs play a major role in economies in Africa as well as in other countries around the globe. We know that, as you're going to see later, that the majority of businesses right now are in this category: small, medium, as well as micro-sized enterprises. You've got a lot of solopreneurs coming into formal business ventures. We've got a lot of small businesses participating on a bigger and bigger scale in exports, in all sorts of trade. Therefore, having these incorporated and giving them the right kind of support that they need to participate effectively means that there are greater benefits that Africa can get from this. We're going to look at some of these benefits as we go into our video, especially when we talk about benefits to you as an individual. Now, let's look at the benefits that you can expect to experience as an individual, as a household unit, and as a consumer in Africa. Now, the first thing is that unemployment will decrease. Now, a decrease in unemployment comes from the fact that if there's support for small, medium, and micro-sized enterprises, it means that a lot of people are getting employed. Now, remember that these small, medium, and micro enterprises are the ones that are at the forefront of employing a lot of people right now. Big business either is gone tech-based, they're using robots and so forth. You've seen it in the banking sector where almost everything is automated. So small to medium-sized enterprises still need people because they have not really capitalized everything. They are more labor intensive instead of being capital intensive. Therefore, giving them the right kind of support, if this system is properly implemented and managed, means that there will be a drastic decrease in unemployment. Remember, in one of these videos, we just showed that the youth unemployment in South Africa runs around 64%, which is quite immense. So these are some of the benefits that are really needed, especially in times like this. Now, if unemployment decreases, this leads us to the second benefit. The benefit is that household incomes will increase. Now, an increase in household incomes means that the standard of living for those particular households will also increase. Now, standard of living is a good measure of economic development within a country. Now, an increase in standard of living means that people have got incomes to spend on consumer products that they want. Okay, so which means that businesses that are offering those products, services will benefit from an increase in income of these household units. Therefore, this also will trickle to businesses. Businesses will make more income. If they make more income, then the cycle of investment in their own businesses, employment of more factors of production, especially more people being employed, increases. So we've got exponential growth in income, in employment figures, and so forth. What it also means, right, from an economic point of view, is that GDP will increase. If GDP increases, it's increasing only because production capacity has increased. The businesses in those countries are saving approximately 5 billion. Therefore, they will have a lot of money to reinvest in their production capacities, which means that the amount of goods and services that are produced on a year-to-year basis will increase. Now, this increases your GDP. If GDP increases, now the probability of having higher incomes will increase, meaning that there is a better distribution of income within the particular country or economy. However, having said that, it would be amiss for us not to mention that there could be some challenges in putting this system to work and to make sure that it works effectively. Now, the first challenge will be bringing or building a system where all the banks that will be involved in these transactions in Africa work as a unified system or under a unified system. approximately 115 commercial banks in Africa coming together to implement such a system will mean that there might be hurdles and things might not run as seamlessly as we think. Okay, also take into consideration the fact that businesses are in it for profit. Therefore, it's one man for himself. And that being the case, it means that competition becomes the problem when you are looking at implementing such a system. So you need to really make sure that all the commercial banks that will be involved in clearing these transactions and the settlements of these particular payments are really unified in pushing the agenda forward. Now, the second constraint that may come in there is that such a system requires a robust implementation of technology and other infrastructure. Now, having the right kind of infrastructure means that a lot of investments need to be put in to make sure that the system has got all the processes lining up to make sure that all things run smoothly. Now, this could be a problem, especially if a development within countries is not at par. For instance, if you were to compare development between maybe Zimbabwe, Mozambique, and Namibia, and so forth, they are all developing at different levels and at different paces. So, which means that we might not have the right kind of infrastructure in countries being at the same level. Now, if it's not at the same level, now, which means that delays can still happen, and this will cause major constraints when you're looking at international trade within African countries. Now, having said that, there are a lot of other benefits, probably other constraints that you are thinking about while you're watching this video. I'm really interested to hear from you what those are. Please leave a comment down below. And also, if you like the video, please give the video a thumbs up, share with your friends, and also make sure that you subscribe if you have not yet subscribed. I also want to give a thanks to the new subscribers that have come onto this particular platform. Thank you so much for subscribing. Thank you for watching the videos and also for watching this video. This is Friday Money Matters. We'll see you in the next video. Thank you. Bye.